we ended up opening to the downside, right? So this morning we ended up opening to the downside. If you guys pay attention to the Discord, man, I'm always putting the levels, right? And the reason why I put these levels is because these levels matter. You guys can really take advantage of these levels, man. So, a few days ago, I ended up putting that, hey, we're in between the 779 range and the 767 range. These are the two levels that I'm going to be looking at going into the week. I believe I did that on Sunday. What did we do on? That was Thursday. Yeah. So we haven't moved anywhere else. Yesterday, today we ended up opening to the downside. My bad. Wow, I'm going all over the place. I'm gonna move to the hour time frame. So we got to 767 on Tuesday, man, and we didn't get below that level, that prime support level. We bounced off of it, and then today we ended up testing it to the downside just a little bit, right? We ended up testing it, and then we came right back up, man. Mm-hmm. So we still moving closer to this range, to the bottom side of the range of 767. Today, the reversal catalyst that we had was the fact that we ended up having those buybacks, right? So those buybacks and the stocks and the global bonds stabilized after the Treasury Department said it will more than double the size of the debt buybacks, easing the term premium. And that's that for today. So all the turmoil from Monday, Tuesday, then you get all the turmoil released Wednesday. So if you were somebody who was long in the market, you would have got stopped out.
Yeah.
Right? And then we'll probably get Thursday, Friday, moving back up to the upside. I wouldn't be surprised if we do. That's not financial advice. And I wouldn't be surprised if we don't. But I wouldn't be surprised if this was one of the moments where they said, hey, whoever wants to long at all-time highs, kind of like a goofball, we gonna grab you.
Definitely liquidity, for sure.
We gonna grab you, man. And whoever shorted the market, shout out to you, man. But this is a prime example is why you don't want to buy at the all-time highs, whether you're trading or just investing in general. If you're already dollar cost averaging and it's that day of the week and we happen to be at all-time highs, I personally would still buy just to keep my momentum, right? I wouldn't worry about it then. But if you're somebody who, Flash, when should I get into the stock market? I see it's all-time highs, bro. Should I buy right now? I bought some yesterday because, no, don't do that, man.
That ain't the way to go.
That ain't the way to go, man.
Unless you want to get burnt.
Yes, so preferably you want to wait for a 10% drop on whatever you're looking at to be able to get in if it's from wherever it is from its 52-week high. You want to see a 10% drop. And our 10% drop on SPY don't happen from that high until 694, right? 694. And be patient, because if you don't think the market's going to pull back, the market will surprise you. More than likely, it's going to pull back. There's going to be something that happens. And like we talked about, history doesn't always rhyme, but it typically does. History may not always repeat itself, but it typically does rhyme. And 12 out of 17 times, when it comes down to the midterm years, we get bear market movement. Okay. So be patient. Like we always talk about, man, pick your one stock you want to get into, but most importantly, pick that ETF, that VOO, get into the S&P 500. We talk about stocks because we love it. We talk about everything, but you guys see what's going on when Flash pulls out the weekly time frame on all these stocks. You see what's going on. It just goes up over time. And this is the index, the S&P 500. Mm-hmm. This is the most simplest thing you can do, man. This is much better than just keeping your money in the bank. Yeah, man. You got anything you want to say?
Yeah, just we had 5 viewers in here, bruh.
Oh yeah. Same at one time?
Just for the last 10 minutes.
Hey. That's record breaking. That's record breaking. That's the first time we didn't have 5 viewers. Shout out to you 5 viewers, man.
5 viewers, man. Appreciate everybody that's showing up, man. We here every week. And I'm glad you're here today.
And like I say, man, I hope you guys learned something. And if you didn't, that's probably your fault because you ain't listening. I prepare for y'all, man.
Yeah, no cap. Now for the last we got 10 minutes. Let's break down this Bitcoin real quick. We on a weekly, man. So like yesterday, I don't usually do this, man. I don't really like that I do it, man. But we in here anyway. Yesterday, I talked about the range that we were sitting in for the Bitcoin, man. And I saw the way that the chart was developing and the way that it was moving. The fact that we had retapped into this higher range and then dipped to the middle of the middle range. That's crazy. We were gonna reject somewhere off of this, and we did, man. We shot above the high range. We are officially, well, we're not really in a full-blown bullish trend until we come closer to this area. I have a couple things marked out for up here and for this space here. Let me mark it out so we know what I'm talking about for this space here. But once we get up to that level, that is basically confirmation that we are getting more bullish after we passed the $70,000 mark. We did tap it a little bit, come up. We went to the high of 68, like 7 or like 68.8. But there's a lot of room to grow, man. We got a couple things that need to be in place for crypto to really have that boom. I still do think that we will have this pullback down here just off the simple fact that there's so much playing in the middle range that we have to come back down here. And it's extremely volatile as Bitcoin. So there is a lot of room to grow, but there also is a lot of room to recover after if we get back down to these levels down here. There's so much more upside. Perfect example of what you were just talking about, looking at we were talking about companies specifically, but looking at an asset, looking at the 52-week high and then seeing where price is now, right? 64% drop. Now, on the literal flip side of that, right? Price now, oh shit. Price now went hella low on accident. Price now all the way up to the high, 82%. We're down 54% in the last, what was it, September? So yeah, October, we're 2 months from October. So the last 10 months, we've been down 50%. I think that this is, once regulations come and things start take their eyes away from the war, we're gonna see a lot more of the riskier assets getting a bit of that action. Now, that's enough for the Bitcoin.
You got the altcoin looking green.
You
Bitcoin
feel me?
Looking green. Altcoin looking green.
Well, XRP had a nice little run up. Let me go to the daily. Nice little daily. Look at this candle. Nothing but green.
Yeah, I seen that recently hit below $1.
Yesterday. It was 98 cents yesterday. I was like, okay, let me see the flare. Flare, same thing, green. Now we're 24% away from shout out official go getter. We're 24% away from that level that I was talking about, that prime level where we haven't even touched in a while. We're 24% away from that. So just imagine what a green crypto market looks like, man. We had that uproar from August last year to October, almost November, where we had Bitcoin at 120,000. We had XRP sitting at $3.60. Flare was pretty high as well. I forget what the price is off the top of my head, but we were up there. Ethereum's hitting the higher 5,000s or 4,000s into the 5,000s. Yeah, man, it's really a time to be alive when we have all of the asset classes really doing their number. You feel what I'm saying? As well as gold. Gold looking like top tier busser right now, man. Look at this. These past couple days been good to gold. We were sitting in this range at the beginning of August, and ever since the 4th, it's been up. As well as silver. I've been charting those out. Those are both amazing charts.
Yes, sir. 10%.
Yep.
You guys already know by now, if you're keeping up with us, as the stocks is moving to the downside, you probably have gold moving up to the upside, and vice versa. Yeah, you guys get it right here. All the asset classes right here, man.
It's right here in front of you. It is right here in front of you. Now, let me ask you real quick, man. We got, because I'm done with my breakdown, we got 7 minutes. Let's chop it up for a second, man.
All right, let's chop it up
for a second, man.
Let's chop it up.